I'm Mike Foley.
Dune?
Maybe. We'll see. This is Allan Hamilton. We're not economists. We're real estate investors, like a lot of you, trying our best to maneuver through some very tricky economic times, try to make some money, and more importantly, not lose any money. And because the global economy is so interconnected these days, we think it's absolutely critical to pay attention to what's going on around the world.
We need to talk about Europe, and we need to talk about debt. When you get right down to it, the bottom line is there's too much debt in the system. Every Western country in the world has basically got more debt than they can sustain. There's four pillars of the global economy. There's China, there's Europe, there's Japan, and there's the United States. All four of those pillars of the global economy right now have way too much debt and are rolling into recession. I want to show you something. This is global debt. In 2002, there was $80 trillion worth of global debt. Right now, we're looking at $210 trillion in global debt. What this means is the global debt has been compounding at a rate of 12% for the last 10 years. At the same time, the GDP, which is how much output has gone, has been compounding at 4%. Okay, that's what's happening with the global economy. This is not a normal event. This is a 1 in 100-year event. When you get this kind of debt, something's going to break. Carl Bass puts it this way. He says, we're in a scenario where the pigs have sailed into the zone of insolvency. When you sail into the zone of insolvency, there is no, quote, solution for you. The bill is due and you have to pay the bill. What has to happen, in our opinion, is these debts have to be written down. It's just that simple. And that's what's going to happen. This money is owed to UK banks, it's owed to German banks, it's owed to French banks, it's owed to US banks. And it's not going to get paid. China is slowing right now. This is a chart of the PMI. The PMI is the Producers Manufacturers Index. So this gives you a sense of how the factories are doing in any country. Right now, as you can see just recently, China is at a 32-month low for producing goods. When this number is above 50, this is expansion. And when this number is below here, this is contraction. So this was the global meltdown right here. This is the bounce back. And we're starting to roll over right now. China, you have to understand, China is holding up a lot of the world economy, right? When China hurts, it's going to take a lot of countries with it. It's going to take Australia, and it's going to take Canada, which they're, sorry, Christy, but it's going to take Canada. It's their resource-based economies, and they're relying on China. I want to show you something. The Chinese property bubble is by far the biggest bubble in property that the world has ever seen. Right now, in Shanghai, they're paying $700 US per square foot for unfinished condos, right? That's no carpet, that's no appliances, that's no nothing. An unfinished condo, they're paying $700 a month. That's more than Irvine, right, Bill?
Oh, yeah.
Yeah. And not only is it unfinished, but who knows what the average person in China makes? Anybody got an idea? $5 a day. $5 a day. So, how's this for a bubble? It takes 188 years for the average worker in China to afford a condo. And the way their society is set up there is, if you're a man and there's more men than women, right? You need real estate to be somebody. That's part of the bubble. Greece. Greece is done. Greece is going to default. Right now, if Greece is to borrow money for 1 year, they have to pay 271% interest. Okay? There is no way they can borrow money. That is the bond market saying Greece, before it declares bankruptcy, the bond market has already said it's done. They used to be able to borrow money at 4%. Okay, look at their interest rates right here. They've gone from 4% to 7%. There's no way the Italian government can operate at 7%. They're completely unsustainable. And this is starting to come out even in the press. Sometimes we hear about these things a year or two before they actually happen, but it's starting to flood into the press that Italy needs a bailout. Look what the Italian debt's doing to, this is the GDP of Italy over the last 15 years. Their GDP is right on zero. This is what I was saying. Europe is rolling into a recession. Even Germany, which is a very strong country, rolling into recession.